Welcome back. Our next guest is a portfolio manager who likes the setup for stocks as we get close to 25. He says he is, quote, fully invested and adding to his exposure to semiconductor stocks. Let's welcome a familiar face to the program. Adam Johnson is founder and author of the Bullseye Brief, and he joins us now. Adam, thanks a lot for joining us. What exactly does fully invested mean?
Fully invested means that I've got all of my money deployed into stocks right now. In fact, Paul, over the past couple of weeks, several of my money management clients have called and said, what's your outlook for 2025? And I've said, I'm very bullish. In fact, I think there's a lot more to like than to fear. And as a result, they have sent more money into the fund, and I've been deploying that. Not across the board. I'm not just going out and buying the entire portfolio. I'm actually trying to be strategic. In other words, there are 39 positions in the portfolio. Obviously, it's an actively managed portfolio. And most times I just go out and buy all 39 at once. But as we've sort of seen over the past couple of weeks, Paul, there have been a couple of days when a lot of wonderful stocks have gotten hit especially hard. So I've been trying to be strategic in what I've been buying, and so far so good. We deployed capital Thursday and Friday. I imagine I'll do some more buying this morning. We are down. I think that as we look out towards probably this afternoon or certainly tomorrow, we're going to see incremental improvement. Holiday weeks are generally positive, but far more important than trying to game 1 week or 2 weeks. Paul, as you look forward, we've got earnings growth, we've got GDP growth, and perhaps most importantly here in this country, we have a business-friendly administration, and that gives me a great deal of enthusiasm for putting money to work in 2025.
The markets have been enthused about that business-friendly administration since the morning of November the 6th. You don't think that's priced in to some degree at this point, do you?
Oh, some of that's priced in. There's no question. But right now, Paul, if you assume that the companies in the S&P 500 will collectively generate $280 of earnings, which would be up 10, 11% from what we saw last year for the same period, then we're effectively trading at 21 times earnings. 21 times earnings, you say, well, is that expensive? Actually, no, it's not. It may be towards the higher end, but if you look at bull markets since 1990, Paul, what you would find is that we typically trade anywhere from 17 to 23 times earnings. So at 21 times earnings, we're not even at the top. And if you say, yeah, well, but some people have said we could be approaching bubble. No, absolutely not. Bubbles happened back in 2008 and in 2000. And at that point, the S&P 500 traded anywhere from 28 times to 42 times. Right now, again, we're trading at 21. So I'm very comfortable with valuation. And while certainly some good news has been priced into stocks, as you point out, if you look at the market as a whole, no, absolutely not. It's not priced in. And just look at that chart. That is a wonderful chart. On Wall Street, they call that from the lower left to the upper right. And you love to buy stocks like that.
You are adding to exposure in semiconductors. Many of those stocks have come off recently.
Yeah. Well, you mentioned Celestica. I'm thrilled you did, because that is one of my holdings. And I know that you've got an analyst who's going to come and talk in great detail about Celestica coming up. And so very interesting, as you look at that chart on the semis, a lot of the semis have come down recently on the assumption that there's some sort of cycle that's happening out there that would, in theory, lower demand, because typically you can actually predict the semiconductor cycle with regularity. And yet, if you step back and you say to yourself, wait a minute, what's happening in a larger sense? Artificial intelligence right now, I think, is so much more powerful than those usual cyclical ups and downs that happen along the way. So computing power, just as a theme, is actually my largest allocation right now, Paul. And it's companies like NVIDIA, Celestica, NXP Semiconductor, Marvell Technologies, anything that touches the need for more computing power. I mean, I can even make a case, because I'm on it, for DICOM, which basically helps utilities and telephone companies build out their infrastructure, because you've just got to push more data through the pipes. And so even something as unobvious as a DICOM, again, just telecom equipment, right, and utilities sounds boring. No, not when you have a dramatic need for computing power. So that's my biggest theme right now. That's why I'm adding to any semiconductors on weakness.
Okay, we're running out of time, unfortunately. You like the financials. We'll leave that for another day. You also like energy services. Those are the drillers, the company that serve companies that are producing oil. Why so?
Drill, baby, drill. We've got an administration that is going to unleash drilling here in a way that we haven't seen for a number of years. In fact, Paul, I think that were it not for wars right now abroad, we would see oil in the low 60s. You might say, yeah, but lower oil prices, that's bad for the drillers. Okay, fair point, but it's very good for service companies because I think we're going to see volumes increase. So you want to be long a Halliburton, a Schlumberger, pipeline companies like Energy Transfer. That, by the way, has an 8% yield. And this is just an environment we're going to finally see drilling approved on federal land, which will help drillers access the cheap oil down here, and that's ultimately certainly very good for the economy. It's another reason to be bullish.
Adam Johnson, thanks again.